Let's hand it to the Fed for setting the precedent, for setting the trend, for lighting the way for all other central banks to print their currencies into complete destruction. If you need to buy confetti, toilet paper, or kindling for the fire, hold off. Soon we'll have mountains of it, easily and readily available. Whenever there is a problem, whether it's too much debt, a weak economy, loss of productivity, lower employment, and a host of other issues, the solution provided by our overlords is to, quote, stimulate the economy with printing money. Do the citizens get any of the money? Absolutely not. Please, sir, may I have some more? No, Oliver Twist, absolutely not. You came here for the truth, so let me unveil that for you. Today we are going to talk about the ECB getting ready to print even more money. Does this sound surprising to anybody? How many times do we have to hear about these central banks going ahead and doing another round of easing? It's a joke. Let's take it back into the pages of history. We're looking at the Great Depression here. This is actually an excellent chart showing you the ups and downs along the way. From the very top to the very bottom, there was a 90% drop approximately. And if you zoom out far enough, you don't really see what happens in between there. But let's pay attention to the rises that occurred along the way. In fact, if you look at the first one, you'll see nearly a 50% rise from its drop, and it picks up 50%. So many people who were getting into this dead cat bounce, it's a concept I talk about in my book, and they thought this was the new bull market. They thought, look, we just bought stocks at a 50% discount. But if they bought in and sold anywhere near that peak, they had a long ride downward and they were suffering big time. And this happened multiple times along the way. And these people were probably getting suckered each and every single time. So whether it's what we are facing today or whether it's something that we'll face into the future, remember this chart. It's very important. I hope you got something out of that. Let's move on to this here. As you look at the San Francisco Fed President, John Williams, saying on Wednesday, there's been no substantial change in his outlook on the U.S. economy or his opinion in a number of times the Fed should raise interest rates this year and next. That's right, trying to reassure everyone, I'm not going to opine whether we should have one fewer or the same as before. And essentially they talk about this because the market is looking for this information. Will they increase interest rates again? Even though it's a fractional amount, and realistically they didn't really do anything at all this first round. But just the words that these high-level individuals in the banking system speak has the ability to change the pace of the stock market. If they just say, we are going to do a QE4, it's just a matter of time, we're waiting for the right time to begin it, the stock market will rise because it automatically prices that in. They make estimations. I think they're going to print $2 trillion this time based on the last time, and $2 trillion immediately gets priced into the market. That's the way this works. It's happening over and over and over again. And we just look at the Fed's, not us, of course, but the general market looks at what the Fed is saying, the Fed's actions as well, and then goes with that. Fundamentals don't even matter anymore. The European Central Bank is widely expected to announce a substantial package of stimulus measures on Thursday, combining rate cuts, additional asset purchases, and possibly more. Here are some options and how they might affect markets. Well, first of all, before I just move into that, look at this. They're expected to announce more stimulus measures combining rate cuts. They're already extremely low. additional asset purchases, money printing, and possibly more. Who knows? They may be buying debt of some of the hurt nations at this time. Let's see what they do, but we know that the more of it they do, the more they have to do. It's a self-fulfilling prophecy. The ECB could move interest rates. They are the ECB's primary and least controversial stimulus tool. Analysts expect the ECB to cut its deposit rate charge to banks for storing their funds with the central bank by at least 0.1%, and that will be at minus 0.4%. The negative interest rate scheme is something that's just the norm these days. Get into the negative interest rates and you will stimulate the economy. That's the idea. Of course, this isn't going to work. Even Alan Greenspan said this isn't going to work. A cut steeper than this would likely weaken the euro against other major currencies. Oh, sure, you can bring it down to negative 0.4, but not negative 0.5. That's bad. This is a joke. Come on. I don't even want to continue reading this. The article's there if you'd like to. This is from my book. The Money GPS hot point occurs only a few times throughout the book. And in this case here, I'm talking about printing money, getting into deficits. I say in the long term, this has absolutely never worked. Why then do the governments believe that somehow this time is different and that they will be successful at preventing a collapse? You can't do it. It's never worked. It's not going to happen this time. And just get ready. Brace yourselves for a bumpy ride. Macau casinos bounce back as gamblers ditch China stocks. Very interesting the way these two charts are converging here as you look at the Macau monthly casino revenue. That's the blue line if you can't see. And the stock exchange turnover. And really, they're starting to converge. Of course, it's a little too early to tell in this, but it would be interesting to see over the next year, even the next 6 months, to see how this goes. Very interesting. When you go to the casino instead of the stock market, what I want to focus on, the top one is the CPI, the bottom was the PPI. Production is down over the past few years in China, and we know this specifically not just because of this chart, but because of other factors that I've been bringing up. The CPI is now at a multi-year high again. What's happening with the inflation rates? Well, look at this chart here. Their food CPI going to multi-years high at this time. Food prices being probably the most important indicator of inflation. Of course, if you're the Federal Reserve, you have ways to manipulate that. The BLS, and they're all involved in it. Being able to simply erase factors that make up your formula, your calculation, in order to provide that to the public, I literally don't understand that. But here we are. But food, if you just focus on that being obviously very important, particularly in the developing nations where it makes up a larger percentage of their disposable income, or income, I should say, then, this is sort of scary when you see this type of chart and this type of trend. This is very interesting to note. All I want to highlight here is the 4 dips that go downward here, or in that case in the bottom left, actually upward spike against the US dollar. Let's look at the one in the bottom right corner. The S&P 500 dropped 5% and recovered within 15 minutes. This is back in 2010. The S&P index dropped by and recovered back by around 5% within 15 minutes. Does anyone believe that this was a natural event? If you just think about it just for a second and know specifically that this can't happen, this isn't possible, and it is computer algorithms which are controlling the system. See, there was a straight line downward. If you look at the trend beginning at the beginning of the trading session to the end, there's a general decline. But for that few minutes in there, it declined by 5%. It doesn't happen naturally. These markets are so fragile, and those heavily invested in it will not admit it. Look at this at the bottom right corner in the IMF Financial Stability Report. When liquidity drops sharply, prices become less informative and less aligned with fundamentals and tend to overreact, leading to increased volatility. What did I just say? And the IMF is saying the same things I do. It doesn't take a genius to figure this out. You don't need to be in finance to figure this out. Look at the charts, chase the information, and connect the dots, just like I'm doing here. If you want more technicals, I'm not going to get into them here on the video, but this article right here has so many technical indicators for you if you'd like to. Deutsche Bank goes searching for liquidity, can't find any. It will be in the description as always. Lots and lots of technical charts for you if you're interested in that. And this is just to leave it off for today. The Pentagon has deployed drones to spy over U.S. territory. That's over U.S. territory. Spy drones over U.S. territory for non-military missions over the past decades, but the flights have been rare and lawful. That's right, lawful, spying on your own citizens, according to a new report. The report is actually by the Pentagon Inspector General, but of course, you have to have a Freedom of Information Act request to get that. Now, I'm at a loss for words sometimes when I read this kind of information because they spy on citizens, whether it's, for example, myself in Canada, they have drones going overhead here, and the US, the same activity, and I'm sure in whatever country you're from, they're doing similar or same thing with the NSA. Look at all the spy agencies engaged in all of this business. And what's being done about it? Nothing, in fact. They claim that it's lawful. How could it ever be lawful? It doesn't make any sense when they're committing crimes right before our very eyes. But it's no different than what George Orwell wrote about in 1984. And we're here today. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to bring these videos up higher in the search results. It's a way of sharing without needing to actually share the videos. But of course, I do appreciate that on your Facebooks and Twitters and YouTubes and everything else. Also, make sure you subscribe. If you're watching these videos, please subscribe to the channel. It's now over 31,000 subscribers here, and I want to say hello to each and every one of you. I do appreciate all your comments. For those who have been here a while, you know that I do comment on the videos. I do get back to as many people as I possibly can. It's very difficult to get back to everybody, but at least the current day or the previous day's video, I try to get back to those people at least. So hello to everyone on there. Look forward to an interview with Reluctant Preppers. They've contacted me. We're going to do a video soon, so look forward to that. If you're interested in other videos, just go to the main YouTube channel page for the Money GPS, and you'll see my other interviews there. Last but not least, if you found the video informative, then you'll definitely, absolutely, positively find my book, The Money GPS, even more informative. If you want to look through it, head over to Amazon because they have this look inside feature. It's going to allow you to flip through the pages of the book and see if you like it. Take care.